welcome to this very special event on the least developed countries. This is an important occasion to take stock of the evolution of the LDCs in the multilateral trading system since the creation of the WTO 20 years ago. LDCs integration into the multilateral trading system is a priority for the WTO. It is a priority for me personally. Now, the LDC group has been very active over the years, gradually enhancing their participation in our different bodies and committees. Over the past 20 years, LDCs have experienced higher trade growth compared to the rest of the world. In 1995, the LDCs accounted for 0.5% of world exports of goods and services. Now that share has more than doubled. It's now 1.17% in 2013. So this is progress, but clearly it is not enough. We need to do a lot more. The WTO has been working hard to bridge those gaps, providing practical support to LDCs to help them build capacity and trading skills is a key pillar of the work in this organization. In fact, the LDCs are involved in about 45% of our technical assistance activities every year. And of course, we also have the Aid for Trade initiative. Research has found that $1 invested in Aid for Trade results in nearly $8 of exports from developing countries in general. And for the least developed countries, that dollar turns into $20 of exports. Another major capacity building initiative, and one which is dedicated exclusively to the LDCs, is the Enhanced Integrated Framework. You all know that, the EIF, and since its creation, the EIF has reached out to over 50 beneficiary countries around the world, helping LDCs leverage trade as a tool for growth. I hope that we can capitalize on the goodwill towards the LDCs and deliver some important outcomes in Nairobi. This means getting some textual proposals on the table as soon as possible so that detailed negotiations can begin. I know the LDCs are working hard in that direction.
The LDCs have been among the most significant beneficiaries of the multilateral trade rulemaking system. We see the preparation for accession as part of building the momentum towards graduation from LDC status. And that means how the process of structured opening up, how the process of integration can be an enabler for growing domestic productive capacity, structural transformation, and sustaining a momentum to avoid the trap of both LDC and low income. Regional integration is going to be important for LDCs to learn the ropes of cross-border production linkages that builds competences if they are ever to be competitive in global value chains. And finally, LDCs as a category are among the most important beneficiaries of a working multilateral system. The success of WTO and its ministerial rounds is critically important to LDCs.
I think we are in danger over the last 20 years of making trade policy much more complex than it needs to be. Stark, simple, easily administrated rules, I think, would help liberalization, but in particular, help the people who do have a growth at heart get on with some of the other things that really matter.
All LDCs have very narrow export base and suffer from debilitating supply-side constraints. And our productive capacity is inadequate to take advantage of the opportunities that exist. Now the question is, how can the WTO and other international community help LDCs overcome these challenges?
It's one thing to have market access. It is another to have market penetration. What in effect we have had, again, is a concentration. If you look at the anatomy of our exports, it's a concentration of primary commodities, even the resource boom area. So the question is, how do we move up to the value, and how do we create an environment to increase the value of the LDC exports? And I think that's what the challenge as we look forward, we should be addressing.
MC10 in Nairobi is important for all members, but not least for LDCs. Our aim is to achieve an LDC package, which will be an important delivery at the first ministerial meeting in Africa. If we succeed in agreeing on the elimination of export subsidies in agriculture and discipline other elements in the export competition pillar, this will also be an important outcome for the LDCs.
Whichever way you look at it, trade costs are complex, they're difficult to measure, but we do know that about 1/3, of the differences in trade across countries, after controlling for other factors, are due to trade costs. Now, in the last 15 years, trade costs have fallen everywhere. But the problem is that they've fallen less rapidly for low-income countries and even less rapidly for the landlocked LDCs. I think the TFA has the potential to address several problems. First, the TFA is rather narrow. Being narrow, it means refocusing aid for trade. So we might be able, if we manage to develop better indicators. The OECD has already developed some indicators called the Trade Facilitation Index. If we go in that direction, then that will help the future of aid for trade, which is very important for LDCs.